Boom, we are live, ladies and gentlemen. Thanks for joining us today. It's been a historic week in the markets. Trump's tariff sending shockwaves through the global economy and creating a lot of volatility and uncertainty. So over the last 3 or 4 days, I spent my time trying to figure out what or if there is any type of long-term thinking. A lot of people generally write Trump off and say, oh, this is just a madman playing madman games. But I think if you look and listen more closely, there's a deeper story going on. So I'm going to actually start today with a tweet by someone I had on the show a long time ago, Charlie Shrem. If you don't know who he is, it means you haven't been in Bitcoin for very long. It's not important who he is right now, but I'm going to read a few tweets to you because I just want to kind of set the stage for some of my next comments. So he writes, tariffs are not the story. Since Trump took office in January 2025, the 10-year yield has dropped from 4.79 to 4.17%, and look how much it's dropped today. That's a 0.62% drop that might not sound like much until you realize that the United States has $36.5 trillion in debt. This is a stealth refinancing on a historic scale. Lower yields equal trillions of dollars in interest in savings. More breathing room, less inflationary pressure, and the market is front-running it. Everyone's watching tariffs, but you should be watching the yield curve. It's the real game. So we're going to take a look at the yield curve later on in this video, but I also wanted to just go over a few other things I thought was really interesting. Also, to kind of secondary send a thought here, if you had joined in our previous video, we had talked about how we thought there was a likelihood that all of these tariffs and the volatility that was inducing was to bring countries to the negotiation table for more of a free trade agreement kind of across the board. And lo and behold, not too long afterwards, following a very constructive, this is by Secretary of Treasury Scott Bessent, by the way, a discussion with the government of Japan, POTUS, or the real Donald Trump here, has asked me and U.S. trade representatives to open negotiations to implement President Trump's vision of a new global age of trade with Japan, with Shigeru Ishiba and the rest of his cabinet. And Mr. Trump, President Trump wrote, I guess it's funny to say that shit. Countries from all over the world are talking to us. Tough but fair parameters are being set. We spoke to the Japanese Prime Minister this morning. He's sending a top team to negotiate. They have treated the U.S. very poorly on trade. They don't take our cars, but we take millions of theirs. Likewise, agriculture, many other things. It's been a change, but especially with China. It all has to change, but especially with China. And unusual whales dropped. We're on track to fully eliminate capital gains tax by 2025, which would be ridiculous. Could send a bunch more money from growing businesses back into either their employees or research and development or a whole bunch of other things other than giving the government money, who is generally not very good at spending it to produce something or anything. Another one here. Taiwan is now offering zero tariffs to the response for Trump's tariffs, and that was our initial premise just a week ago on the Thursday TO Talks, was that we would actually see a bunch of countries fold to this zero trade agreement. There's a few here. Another great one from Winklevoss, but I wanted to focus on this. Also, if you haven't watched this yet, I've reshared it on the Instagram, on my Twitter page. It's the conversation between Tucker Carlson and Scott Bessent, the Treasury Secretary. He is smart, and he knows how to play the economic games probably better than the average person. So anyone who you see writing stuff on Twitter, talking about they know what tariffs are all of a sudden, I would generally try to ignore those people. Scott Bessent's got a great track record for the job that he's good at. So let's see how they do first. But again, let's go. There's United States and Argentina become the first zero tariff countries. There was more than one. I think there's about 6 or 7 countries that came out recently said we're going to zero tariffs with the United States. Now, this isn't going to happen right away. I think, from what I understood, from what Scott Bessent had said, there's somewhere between like a 2 to 3 month window until the next treasury and bond sales go up for auction. And they were hinting that the first countries to show up for these auctions would be the first at the trade table for reducing tariffs. We're going to be in a very volatile and confusing time for market price discovery, and it's going to push a lot of businesses who had been using cheaper Chinese products and rebranding and selling them in the United States probably out of the market. I also saw the other day that our Vietnam was negotiating for 0% tariffs as well. And Vietnam is actually perfectly placed to take a lot of the manufacturing and production that China had and have a better relationship with the United States. They've talked about introducing Starlink there, introducing Tesla. This type of free market could signal a big boom, but I also think it signals a new quantitative easing that's going to come somewhere in the not so distant future. I don't think there's a ton of inflationary pressures for the average person yet. It hasn't been around long enough. And I think by the time it takes for everyone to get to the negotiating table for those things really to hit the street, you won't see much of that inflation. Largely, again, because inflation mostly comes from the government printing money, not from tariffs or trade agreements between the countries. Otherwise, we would have seen that already. So one of the next things I wanted to do is dive into Bitcoin and take a longer viewpoint. Shared by one of the Bear family members here, Mr. Bear Den Jerry. I thought this was really nice. If you know the Wyckoff reaccumulation schematics, there's a very high likelihood that we are in the final stages of a last point of supply or a backup LPS or BU for short, and the SOS stands for sign of strength. I believe that this is correct. You know, we've actually been charting this since the spring and since the original buying climax and automatic rally. We went a little bit deeper than I thought we would, and that's usually the case. Springs are full of dynamic fear, usually fear beyond our own capability of recognizing, because it means we're also scared in that moment. I tell you, during the beginning of March 11th of 2020, I was also scared in that moment. I've learned to take that thought, turn it into a sociopathic behavior, which means if I'm scared, I should buy assets and trade all of my dollars. So as I see people get more scared, I get more greedy, and it's against common human nature to think that way. But it means if there's an evolving pandemic or an evolving war, it means you should trade your currency for assets, because those asset prices are going to be inflated, likely through money printing, and that's happened over and over and over again. So shout out to Bear Den Jerry for that fun chart. The next thing we want to look at was reaccumulations. We figured we were jumping up into a reaccumulation. Generally the backup phase and SOS and LPS phase kind of lead into these. I think we're seeing a reaccumulation schematic for, that's what I said the week before. I didn't take a close enough look at the alternative assets, so it left some room for high potential gains there on the table. But Bitcoin, on the other hand, stayed very beautifully within this trading range. The S&P 500 dropped significantly, and Bitcoin really only tested the bottom with fairly high volume spring as well. I might actually, just for fun here, I'm going to write this in as spring. Now we just need to remember it's a spring or a sign of weakness. I originally thought the spring would be here, but I also said it might be a sign of weakness. Because this is always the most difficult part, waiting till after the spring to take any big plays. So generally you don't try to build positions at the shakeout or the secondary test, because the spring could do one of two things. A, it could turn into a sign of weakness, which means we could go lower, but I don't think that's the case. I think seeing how well Bitcoin is held up against the traditional markets, considering it is a risk on asset, just goes to show that people are generally referring to Bitcoin more as a store of value, and a store, and the ability to send money across borders without governments is just unimaginably valuable. So that going forward, I think this is going to be the spring. I think the sign of weakness would have been tested here, that we would have closed below the range and moved lower. We didn't. So keeping a close eye on this, because it very quickly could change. And I actually do think that the regular markets are going to be seeing some more significant dips. So for now, I think this was a reaccumulation after decline, that we basically are seeing this, the first part of phase B. I think we're going to run all the way back up to around 89,000 now. Here, I think we're going to go boop, 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 back up to 89,000. Maybe make one more half step down. Again, very similar to what we see here. some long kind of drawn out process. They cut rates, maybe even bring in QE. It gets confusing, and then bam, we're off to the races. This is what I suspect. So take a screenshot of this. I think I'm going to be correct here. I definitely missed out on some potentials for shorting the market, especially the altcoin market. Those were some significant drops. So wasn't right about everything everywhere, but I think Bitcoin just is such a dominant asset in this space. We're going to find ourselves justified and correct on that one. So something to take a note of there. You can't get everything right, but it's really looking like Bitcoin's going to be a strong, dominant player for years to come, especially as the governments learn they can't trust each other with how much money they're actually printing, and they go into a state of, I guess, kind of confusion and denial about what's happening. So I actually suspect that based off what we were just reading, some of the news around zero tariffs, the likelihood of the U.S. is basically stealthily refinancing its debt to the tune of trillions of dollars, we could see a rip-roaring bull market. But I think it's time to get out at that point and trade your paper assets for something more physical. Remembering that Bitcoin is a physical asset. If you want to remember it in your mind, you can take it with you wherever you go. And in times of governmental crisis, you are looking for assets that you can generally carry with you. It's one of the reasons why gold has done so well. For instance, if you were in Uganda during Idi Amin's reign, or Ukraine during the war with Russia, it's basically whatever you can take with you in that moment that becomes the most valuable thing. And often people wait too long to escape the governments that are about to drive over them. So keep that in mind. This is really us versus the government, not us versus each other. So when push comes to shove and the confidence gets lost, it'll be your neighbors that you have to learn how to fucking collaborate with. Steve with the Arcane Bear, signing off for the next ones, and we'll see you guys again in 2 days.